Good evening, everyone. My name is Henry Gamble, and in tonight's free video, I'd like to take a look at Costco with you. So, we'll get more into this in the paid video, but I think the S&Ps are in a very precarious position right now. I think it's hard to want to be steadfast with a bullish opinion, and clearly being steadfast to the bearish side hasn't been either. So we're going to cover more of that in the paid video, but more of the concept of looking at this tonight is just, okay, if things are a little bit uncertain, let's try to find the best possible patterns that we can, and that's what I'm looking at tonight in Costco. So the first time that I really started getting interested in Costco was back down here during this period. We had a nice weekly squeeze in play, and they gave us a very nice pattern of consolidation. It took us quite some time, and we had to sit on this trade for a bit, but did finally get the resolution that we were looking for and a very healthy move. After that move, people are always excited, and they always want to say, okay, when can we come back and buy Costco? And I always say, there's really no need to. It can be tricky because you're thinking, wow, this is such a great performer and it's treated me so well, but I always prefer to focus on the signal rather than saying just because Costco has done well in the past, let's play it again. I would prefer to find another weekly squeeze, but what is nice about this pattern is I think once you make this, you can argue a little bit of a kind of free-handed cup and handle pattern. Now it's not the best, and usually when you're seeing these handle patterns form, they could correct a little bit further down, but since this one was aggressively bought, and since it did a really good job of holding the 10-week moving average, I just think that's a nice bullish pattern. Now, I don't have any interest in buying it just off of that pattern, but it looks good. It gives you a reason to confirm the trend. It hasn't made extensions, that sort of thing. And then when we drop it back down into the daily chart, this is where we have our fresh setup and a fresh way of looking at it. So you start with the weekly pattern and get a broad view of the chart. Then you drill down into a daily, and we can start having a more precise view of what's going on. I thought Costco was very interesting because if you hide your studies here for a moment, and you look at this really nice run, of course, as we all know, you never want to buy a move that is kind of the elation move here. You want to watch it on the pullback. So running from swing low to swing high, that has a perfect area of a 618 retracement that held very nicely. Almost looks like a little bit of a quadruple bottom, if there is such a thing, but essentially it was just very nice support around 145. Now when we get that move, awesome. The 618 holds, and then you pop up here on, this was the March the 5th. I always encourage people to not buy this move because that's going to be expensive as far as your options are concerned. It's a little bit of a reactionary based move, and you'll also notice that it's near an extension of these swings. So a lot of reasons to not buy that move. But then when you saw the pullback on what was Friday, then I like to measure this from swing low to swing high, and notice how once again we see a very nice representation of the 618. So these are very important ratios, they're very important levels to consider with your analysis, and when those all held, it just sets you up for a great move as far as the fib work is concerned. Inside this pattern, you're going to have two targets. The most immediate and most aggressive will be this swing high to swing low, and that takes you into 152, 154. That's your aggressive targets. Or I should say they're more conservative. They're going to be the ones that are brought up more immediately. If we run back against these bigger swings, this is more what I'm looking for to take us up into about 160. And then when we add our studies back with this, I also love seeing situations where the voodoo lines coincide with fib extensions. So there's a couple different levels. Obviously the more immediate ones are more conservative to take your profits on. The further dated ones are more aggressive because it's going to be harder to get into those. And I think there's a couple of ways to play this. Showing you how I've established these trades. Part of these we have set up in our chat room today when we started to see those triggers. And what I would do with this is a couple of things. The easy trade, if there is such a thing, I think is selling the put credit spread against 150. It's a good technological or a good tech level, a good psychological level, and then selling these puts helps gives you some positive theta decay while we tack on some additional calls. I like going out here in the further dated calls to give ourselves more room into the bigger extension, and then if you want to tack on a little bit more aggressive risk, these front dated options would be a great one to take off at your first target. So there's the levels, the signals, and how I got to them. I hope you guys find that helpful, and if you have any other questions, let me know. Otherwise, I hope to see you in the paid video.